Hi everyone, welcome back to Be Rich. It's me, Vinod. I hope you're doing well and things are great at your end. Things are looking fabulous at my end because, like I shared on Instagram, so far till the 23rd of this month, that is, the Nifty, if you look from January 1st to now, is down 2%. And our Tiffin coffee range, what I've been asking guys to invest, which I've been doing, is up 2%. So the market is down 2%, but our so-called portfolio is up 2%. And this is the power of Tiffin coffee investing. And this is why I've been harping about it on and on. The reason is we all tend to follow market news and we all get distracted by what's happening with Trump, with macro, this and that. And we seem to forget all this only is possible if you keep investing in Tiffin coffee ranges. All of us every day get distracted with market news, what's happening macro, what's happening in country, what is happening here. Then we hear someone talking about a tip, we see some video. But if you do not consistently invest, it's not going to happen. And not only invest consistently, you have to invest in small incremental amounts. And the reason why I say this is, it builds you confidence when the market is fluctuating. If you look at the companies we've always been considering for the last few months, that is, Dr. Reddy since beginning of this year is down 6%. South Indian Bank since the beginning of the year is 4%. Gold, if you've been looking at it, it's up 4%. Natco, if you're looking at it, it's down from January 1st to now, it's down 9%. Tata Motors is up 1.5%. Hero Motor Corp is down 1%, 1.3. Karnataka Bank is down by almost a whopping 10% from 1st of January. ITC is down 9%. IndusInd is up 2%. Manappuram is up 5%. Manappuram and gold are the two big stocks which are up. Of course, South Indian Bank is also up because their results came out recently. I'm sure you've heard Anand talk about it in the videos. And Dana and me are probably also going to talk about it later in the weekend, which I suggest you watch if you missed it. But if you see, overall, things have been looking negative, very few positives. But if you've been looking at stocks on a daily basis and you've been sipping in Tiffin coffee ranges, you can still glean a little bit of positive return. It may turn negative, right? This is not something that's saying guarantee that you'll be positive. Maybe a week later, if I look at it, the market might be up 1.5%, and I might be down 1% or a half. But what happens is the law of averages kicks in, and if you consistently, if the market is moving in a direction, that is your stocks which you're looking, individual stocks. When I say market, don't take Nifty 50, right? We're not investing in the Nifty 50, we're looking at our individual stocks. Those over a period of time, especially when they're undervalued, will start turning positive and giving returns. So if you're looking for options, if you're looking for opportunities, again, if you've not done any Tiffin coffee investing, you have just signed on to us now, or you found this video now and you're thinking, what should I be doing? Market is down from the highs of 26, it's come down to 23s, and everyone's saying, including Anand, that it might further correct with all what's happening with Trump and the tariff plans. It may come down further. Then there are already opportunities here, and I strongly encourage you to look at stocks, but be consistent and be economical in your investment. Like I said in the previous video, I have people who are talking to me who heard about Tiffin coffee range and been dropping 50 lakhs in the market in a period of 60 days, which is a crazy amount of money. Even the Ambanis do not consume 50 lakhs for Tiffin coffee, right? That is a lot of money to drop. Tiffin coffee at max is 2,000 rupees. I don't want you to get overzealous and go more than that, because when it's around 2,000 rupees, you feel you can take the 2,000 rupees going to 2,500. Even if it goes down to 1,000, you don't feel so bad because it really doesn't hurt that much. And with the law of averages, like I was saying, if you are consistent with that, you will not see your portfolio going from 20,000 rupees maximum will go down to 18, 19. You will not see it drop like for that person 50 lakh, where it's dropped down to 35 lakhs because they dropped a lot of money when the market was on its highs, and now it's at 35. Of course, they bought quality stocks. If you bought a Natco, for example, which is down 9%, if you had put 10 lakhs in the beginning, you're down almost a lakh now. Natco is still a very good company. It's still at a fabulous price. I would still tell you to buy more, but you will find it very hard to buy when your 10 lakhs has become 9 lakhs. It is very difficult. Even someone like me or Anand, anybody would find it difficult to justify putting more money in the market when you feel like you're losing a lot of money. This is the reason why I say you have to cut it into chunks smaller pieces and deviate out. Even in the video where I spoke with Dana, where we spoke about the 1,000 rupee, 3,000 to 5,000, like that. Once we reached 5,000 and more, I said don't invest it in the first of the month and forget about it. Cut it into pieces and dip in it week-wise. Every Monday you do. If you're not able to do it every day, it becomes too small because the amount of money you have to invest is small. Then do it once a week. Unless you're in a 1,000 rupee case, then your strategy should be completely different. But there are opportunities even for people who have less than 1,000. Like I was arguing with my friend Mr. Arun behind the camera. Vehemently, he keeps saying he's got money, but he only wants to look at it when the market severely corrects. I told him, what are you keeping the money in the account for? At least if you had listened to my brother's advice and looked at gold, gold is up by 4%. And gold is safe. In a volatile environment, any person who's even extremely conservative in investing would tell you gold is the safest thing. It's a safe haven. It's called a safe haven because the volatility in gold is that much less. Like my brother is saying, if you're looking at anything, if you're an extremely conservative person, keep it in gold. Or even if you're a zealous person like my friend Arun and you want to only invest when the market cracks massively, instead of keeping it in your savings account, look at putting it in gold at least. There are opportunities and options in the market for you to get into it. And the reason why I'm telling you to get into it is with the way the world is right now, where interest rate is standing, where inflation is, we have to get up and get going. If we don't dust ourselves up and get moving, trust me, it's only going to get harder and harder and harder. Like it or not, this is the world we live in. Like it or not, inflation is a reality. Like it or not, money is not and job employment is not forever. All these are finite and we have to make sure whatever time we have that we live well, that we have peace of mind. And that is the goal of all this. Goal of all this is to realize that we can have peace of mind now. That is a very beautiful thing about value investing. What you gain is you gain peace of mind right now because you're taking care of your future by investing regularly, you're seeing returns holding, and then you get peace of mind right now. You don't have to wait for 15 years for your anxiety to go away. Your anxiety can start coming down right now with investing. So I strongly urge you and request you to start looking at it in a small manner here and there. And most importantly, get yourself a financial advisor who's SEBI registered. I can't also stress that enough. A lot of you are winging it, which is not a good thing. It's not a safe thing. With half knowledge, half information, deciding to do things. If you don't have the time to do research or you don't have the bandwidth to get yourself a SEBI registered advisor to tell you, then do not buy stocks, buy Nifty 50 passive mutual funds and forget about it. But if you are interested in investing and you don't know anything and you're absolutely new to this, please get yourself someone who's SEBI registered, who gives you time when you need the time. A lot of you ask me for time and you know how busy we all are and we don't give you time. Yes, what me and Anand tell you should only give you ideas, but you should definitely not be investing based on just what we say on a video. And that's why I do not like doing, when you guys repeatedly ask, should we do this, should we do that? I can't answer it. I don't know anything about you. I'll be very, very wrong of me and irresponsible of me to tell you what to do. And I don't know anything about your financial background, what risks you are willing to take, and what underlying assets you have and liabilities you have, and where you are. So all that is very important. It's like taking medication. Just because you see a YouTube video, you cannot go take a vaccine or you will immediately go ask your doctor, I saw this video, should I do it? Same thing when it comes to investing. You can talk to your SEBI registered financial advisor, say, hey, I saw this video. They're talking about this Tiffin coffee thing. Should I be looking at gold? They'll give you advice, because they know you. You've been willing to share your information with them. So that is important. So these opportunities are even more present. And all of you keep asking me, what more, what more, what more? Why do you need what more? The stocks which I've read out, Dr. Reddy is down 6%, NATCO is down 9%, Karnataka Bank is down 10%, ITC is down 9%. These are all fabulous companies, fabulous stocks, available at even bigger discounts than the beginning of the year. So if in the beginning of the year you decided not to, it's a great time to enter. So that's the main thing which I wanted to get out to you guys today. Please be disciplined, be consistent, and if anything, get yourself a SEBI registered advisor, like I said, before you venture out into doing anything, so you know where your lay of your land is. If you're already an expert investor and this is something you've been doing for years and you know what you're doing, then carry on doing it, and I wish you the best. If you're new to this, please be careful when you're doing this too. Both are important. So nothing else more to say. I do hope you have a wonderful evening, and tomorrow morning is another day. It's day 18 in our calendar of investing 247-day challenge which we are doing, Tiffin Coffee Range Challenge. We have rebranded the 52-week challenge as the Tiffin Coffee Range Challenge in Instagram. So if you're wondering what happened to 52-week, if you've seen one of the older videos and you're like, it's not there, there's no 52-week. It's been rebranded. Thanks to the participants of our group. They all voted up saying that it should be changed. One of our team members in the group actually recommended it, which I thought was a fabulous idea. So we've changed it to Tiffin Coffee. You can join us there. It's there in my Instagram. If you click on my bio, you'll find that group there. You can click and say join and participate. Or now and then I keep putting stories from the group and it says join channel. You click on that and you can join the channel there too. There's nothing really complicated in it. And lots of people have just created an Instagram account just to join the group, to have a conversation. They don't do anything else. They come into Instagram, see what's the latest gossip there about investing in Tiffin Coffee and whatnot, and they log off. So you can do that too. You don't have to use Instagram per se to participate in this group. You can just come create a dummy account to come and talk to us and have a conversation. Like I said, tomorrow's day 18. So I've listed out these companies and you can look at it. Some of the stocks today in the market have gone up, some have gone down. That is not really important. Even these FIA data, which I'm sure Rupesh should have put up what happened yesterday in FIA on the screen. This is just purely intellectual. Yes, some people are buying, some people are selling. That's true every day in the market. It just shows you what is the mood of the FIIs speaking. What the Indian rupee becoming weaker tells you that. Yes, it kind of gives you a lay of the land, maybe what's going to be happening going forward. There's more pressure on the Indian stock market. That means there's more opportunities for you to keep dipping and sipping as we go along. The day changes. A lot of you keep asking, sir, have we got into a position where we should do lunch and dinner? No, we have not gotten into lunch and dinner. And to be very honest, we are a Tiffin Coffee Range Challenge. The whole point of that previous video which I did where I spoke how to make 1 crore, 4 crores, I was consistently investing every month the same amount. No matter during the COVID crash, the financial crash, I was investing the same amount. In 15 years, I got there. So I wanted to be consistent like that and not worry about getting you into lunch and dinner ranges. If anything like that, some great opportunity happens and I want you to sell your house and consider it, definitely I'll be the first one to scream saying, oh my God, ITC is being sold for 1 rupee. Please sell everything and buy it. Anyway, that's just a joke. If it does happen, please don't do that. That said, I hope you had a wonderful evening. Like I said, tomorrow's day 18. Do consider investing. Be safe out there. See you again tomorrow with another video. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.